All right, so in today's episode, we're going to be talking about taxes, specifically a child tax credit, which is in a new bill that was proposed on June 7th. The bill is called the American Families Act, and it's essentially an extension of the previous bill, the previous American Families Act from 2021. Remember, in 2021, there were people who were receiving $300 a month per child or $250 a month per child, and they were talking about how can we make this permanent. That's what this bill does. So short version, this bill does a few things. One, it increases the child tax credit from $2,000 to $3,600 for children under 6, and increases it from $2,000 to $3,000 for children between 6 and 17. So that's a short version, right? More details. This bill has a lot of support. I mean, it has over 200 members of Congress that support it, and dozens of organizations, like family-friendly organizations such as the Child Welfare League, the Children's Defense Fund, and the Public Advocacy for Kids Association. So in essence, what this bill would do is that, one, it would increase the child tax credit. Two, it would allow that child tax credit to be refundable, right? The full child tax credit to be refundable. And three, it would allow for the child tax credit to, it will give you two options. It would either allow you to receive that amount on a monthly basis, or it would allow you to receive the full refundable amount on your taxes. Meaning, if you have a child that's under 6, the amount is $3,600. You can either receive that $3,600 in increments of $300 for a whole 12 months, which will total $3,600, or you can receive $250 a month for children between 6 and 17. You can receive $250 a month for 12 months. Either way, you would get the full refund. So there's a big difference between a credit and a refund, right? So it used to be, for example, in 2021, that if you got a credit, the credit was $2,000 per child. And what that credit means is that if you owe $2,000 to the IRS and you had a qualifying child, then that $2,000 would cancel each other out. However, if you owed zero money to the IRS and you still had a child that qualified, the refundable portion of that $2,000 was $1,500. So as a result, you would receive a $1,500 refund. So that's the difference between a credit and a refund. In 2023, that refund amount was increased from $1,500 to $1,600. What this bill does is that not only does it increase the child tax credit at all, it also allows the entire balance to be refunded. So in this example, same example, if you owed $2,000 and you had a child that qualified under 6, you would receive $3,600, and then $2,000 of that would go to the IRS, and then you would receive the remaining balance of $1,600, right? So that's in that example. If you owed the IRS zero money and you still had a qualifying child, you would actually receive the entire $3,600 as a refund. Hopefully I explained that well enough to make sense. If I didn't, let me know in the comments. But that's what this bill does. So let's talk about thresholds, right? Because, well, pretty much everybody's going to be able to qualify for this, because if you're married filing jointly, the threshold before you start losing money and becoming phased out is $400,000. If you're making $400,000, and every $1,000 that you make over $400,000, you will start losing a little bit of money out of that $3,600, for example, until you're eventually phased out to zero. That's for married filing jointly. If you're single, that amount, that threshold is $112,000, and if you're filing head of household, that amount is $300,000. So that's basically the bill that's being proposed by the Democrats. I think if it works, it will help out a lot of people, seeing as during 2021, remember people were receiving $300 or $250? The Treasury Department sent out over $90 billion worth of those payments. And of course, we know where that money went. It all ended up back in the pockets of people who own assets, but it still helped out the people who needed it most. So there is no coincidence that this is happening just before an election year. Remember, before the last election, there was promise of student loans being forgiven, right? There are promises being made on both sides, but that was a prominent one. And now, as of today, student loans have still not been forgiven, right? So, like, this sounds like a great bill. All I'm saying is that there's always a reason why these things are happening. It's not purely out of the kindness of their hearts. So I think it's a great bill if it does pass. I mean, I for sure would benefit. A lot of people would benefit from it, but no, that's just my 2 cents on the topic, and that's just the basic synopsis of the bill. And so there was talk about like a baby credit. Like, if I didn't see it in the actual bill when I read it, but it might be in there, I may have skipped over it. But there was talk about a baby credit, meaning that if you had a newborn child, like born in January, right, you would receive $2,000 up front for that baby, and then you would also receive the remaining 12 months. So you would receive $2,000 in January, then February, March, all the way through December, you would receive an additional $3,300, and then you total out of $5,300. So that's what's being talked about right now. If this bill passes, I will bring an update. But as of right now, it's just the bill that's being introduced. It has not gone through the full process yet. But hopefully we get more information about it, and hopefully it does pass. I know it will benefit a lot of people. And that's going to be it for today with what's going on. So that's what's going on with the child tax credit. And, you know, like and follow for more, subscribe, please. And please leave comments down below of what you would like to see next. I mean, I do tax stuff all the time. I've been doing taxes for like at least 13 years now. So just let me know if you have any questions regarding taxes or what's going on in the economy, and we'll talk about it next. We'll see you in the next one.